Hello viewers, welcome back to my channel. I am Neha Paryani, and in this session we are going to start a new chapter called Accounting for Share Capital. Okay, or few people also call it as with the name of issue of shares. So this chapter is very important for your you can say 12th standard. Okay, so yes, we have this chapter, and let us start with it today. Now this is a huge topic. Okay, but before going for actual accounting treatment, we need to understand its concept. Okay, understanding the concept is very necessary here. So once you understand the concept, or you can say process, then it will be easy for you to understand rest of the things and do journal entries on this. So basically, in this chapter we will have mostly like 80 percentage of things are journal entries only. We need to do journal. Okay, then later on we may have to do balance sheet or even cash account. Okay, so that's it regarding this chapter. But in order to do all that, we should know the concept here. Okay, so accounting for share capital, right? What is, first of all, we should be knowing what is mean by share capital, right? So whenever suppose there is a company, okay, let's assume this is a company, okay, and this company requires certain amount. Okay, this is a company, and this company wants to expand its business, or due to some reasons company wants additional capital, right? So what company does, company will issue shares, or yes, company will issue shares to the public, to general public. Okay, suppose let's name this company as A Company Limited. Now A Company Limited is issuing shares to general public, which means, so its share is nothing like a paper, yes, a document you can say, right? But it is like an asset for the investors. People can invest their money by purchasing the shares of the company, right? Now A Company Limited is issuing the shares. Now whoever will be interested to purchase the shares of A Company Limited will uh, will invest the amount into a company. Suppose A company is issuing 100 shares, and the share price of each share is suppose 10 rupees. Okay, so this is just a very small figure. I'm just giving you an example here. A company is issuing 100 shares. Okay, so each share price is 10 rupees. Right now, suppose general public wants to invest the money into A Company Limited. So what people will do? They will give 10 rupees to A Company Limited. I mean, public will invest their 10 rupees into A Company Limited. In return, A Company Limited will issue them shares. As I told you, it's nothing like a document, a paper. Okay, so it's a legal thing which is an asset for the general public. Now, in return, so for the investment made by the people, A company will also give them certain rate of interest. Okay, when we are talking about shares, so the rate of so the returns will be in the form of dividend, not interest. When company issues debentures, returns will be in the form of interest. But currently we are only talking about share capital, so company will provide them dividend in return, right? Basically, general public is investing the money into this company, and in return A company is issuing shares to general public. Clear? So this is like very one aspect of concept, right? Still there is a lot to know about this. Now, so do you think every company can issue shares, or every company can uh, ask for money from general public? No. Okay, so SEBI has the authority to give them permission, to give permission to the companies whether they can collect the capital from public or not. Okay, so before issuing shares to general public, this company has to go through many legal process. Okay, company has to enter into IPO. Then if a company is successful in IPO, then company can enter in FPO, which is nothing but collecting shares, collecting capital in the form of share capital from general public. Okay, so all these things you will again learn in business studies, okay, in your business study subject, right? So now basically companies issuing shares, and in return general public is providing or investing their money into the company. So for whole of this process we need to do accounting here. Okay, so as I told you, all the companies do not have permission. Only companies which find success in IPO can issue shares. Now suppose a company limited was successful in its IPO. That is the reason companies issuing shares, right? Now what happens? So basically, do you think that a company limited has unlimited capacity, like unlimited uh, choice to collect the capital? There should be a restriction, right? So how much capital can a company limited collect from shareholders, right? So people who are purchasing the shares by investing their money into the business or the company are called as shareholders, right? So there should be a certain restriction. Okay, so uh, SEBI, SEBI provides an authority for the companies depending upon their financial position, depending upon the transaction they make, depending upon the nature of their business. So SEBI, that is Securities Exchange Board of India, provides an authority for the company that maximum in your lifetime, during the course of your business or in your lifetime, you can only collect capital up to rupees 1 crore. Suppose this is just an example. Okay, so 1 crore you can collect depending upon a company's financial position. So this we call it as authorized share capital. What does it mean? So it means that a company limited has authority of collecting 1 crore rupees from general public during its lifetime. Clear? Now it depends upon the company that they want to collect it all at once, okay, at a single time, or they can also collect it in regular intervals or whenever they require. Okay, so this is what is called as authorized capital, means they only have authority. There is a restriction for collecting capital from general public, right? Then second thing that we should know here is issued capital. Now, what is issued capital? So, as I told you, suppose this 1 crore rupees, okay, company wants that they should not collect whole of the amount at once. Okay, so currently assume it's November 2020. Okay, so during this month, in this particular period, company only requires 20 lakh rupees. Okay, so company is dividing this 20 lakh rupees as how what you say 2 lakh shares at rupees 10 each. Okay, company is dividing this into 2 lakh shares at rupees 10 each. So basically now company will be collecting 20 lakh rupees from general public. Okay, currently company is issuing 2 lakh shares to general public for subscribing. So this is what 20 lakh rupees we call it as issued capital. Okay, out of how much authority does a company limited has? It has authority of 1 crore rupees collecting capital from general public. Out of that, in the month of November 2020, company is only collecting 20 lakh rupees by issuing 2 lakh shares of rupees 10 each. So what will be issued capital of the company for November 2020? It's 20 lakh rupees. Do you understand the difference between the what you say authorized capital and difference between the issued capital? Clear? So these two things are very important which you need to know. Okay, then there are also certain cases like oversubscription, okay, and under subscription, right? So we will learn all this again in my upcoming sessions. Right now what we need to learn here is the process. You should understand full process here first. Okay, so how these shares are issued, how the amount is collected, right? So again let's take the example of same company, which is a company limited. Now assume a company limited is issuing, let's take a small figure, again 100 shares of rupees 10 each. Okay, so this 10 rupees again will not be collected all at once. So there are certain process or there are various stages in which the company will collect this 10 rupees. Okay, so assume 10 rupees now is collected first. Okay, first process. See, I'll explain you process also. I'll also show you the amount. Okay, first what happens? A company limited provides advertising in market. Okay, it could be through newspapers, it could be through electronic media, whatever. Okay, so advertisement is provided that A company limited wants to issue shares. Okay, so it is planning of issuing 100 shares to general public. Now general public, whoever is interested, would like to subscribe for the shares of A company limited, right? So assume this is general public, right? Now the general public is interested in subscribing or investing money into A company limited. So what general public will do? First they will pay the amount into company's bank account for purchasing the application. Okay, so first step here is, okay, you also have to remember steps. Okay, first step here is application process. So in this process, what happens? Company will issue applications for the public, and in return, public are paying the amount, application amount to the company. Okay. So one share price of A limited is 10 rupees. Okay. So during the application process, assume company is asking to pay 3 rupees. Okay, during application company asked to pay 3 rupees for purchasing or for getting the application form. Clear? So out of this 10 rupees, still how many are remaining? 7 rupees are remaining. So first step here is application, right? Now what will be second step, right? So now public has subscribed or purchased, you can say yes, purchased the shares of A company limited. Now A company limited will allot the shares to general public. Okay, first public has filled the application for the shares. Now company will accept those applications and will allot, or you can say, or and will distribute the shares to general public. Okay, during allotment process, so basically second process is allotment process. Okay, so during allotment process, now 7 rupees are remaining, right? 3 rupees are already collected during application process. So 7 rupees are remaining now. Now during allotment process, again company is telling to pay 4 rupees during allotment. Okay, remember one thing, it is not necessary that how many applications we have received means company has received, company will allot all the shares. It's not necessary. Sometimes there will be oversubscription. So again, that's a different case. We'll understand that later. But second process is allotment. Company is allotting, or you can say distributing, the shares to its general public. So during allotment, again, company will collect certain amount. Okay. So now out of 7 rupees, 4 rupees are collected during allotment process. Okay. Now how many is remaining? 3 rupees are still remaining. 3 rupees are remaining, right? So when allotment is done, so this general public will become shareholder. You need to remember this. While filling application, still it's general public only. But when allotment is made by the company, like company is allotting a share, suppose this person's name is, okay, let's assume this person's name is P, Mr. P. Okay, so when company allots the share to Mr. P, now Mr. P becomes the shareholder of A company limited, right? So on the name of the person, company will allot the share. That will be second process. Now still 3 rupees are remaining. Company still needs to collect 3 rupees from general public, right? Now after suppose 2 to 3 months, company again requires certain amount. Okay, so now company will again call, company will make the first call to general public, not general public. Now these are now called as shareholders. Okay, company will make first call to shareholders, to its shareholders, asking to pay suppose rupees 2, suppose rupees 2 on first call. So third process is first call. First call in the sense company is asking its shareholders that Out of 10 rupees, you have already paid 3 rupees during application, 4 rupees during allotment. Still, you need to pay us 3 rupees. So better uh, during this process, I require certain amount. Company says that. Okay. So better to pay 2 rupees during first call. Okay. Yes. So public will pay or not. Shareholders will pay 2 rupees to the company during first call. Okay. Now still 1 rupees is remaining, right? Again, after 2 to 3 months, again if company requires amount, then company will make the second call. Okay, company will make the second call. Now, so company will finally say that still out of 10 rupees, 1 rupee is still remaining with you, so better to pay it now. Okay, better to give it us now, we are in need of money. So at last, second and final, you can say this is second and final call, because out of 10 rupees, full 10 rupees is collected. Okay, so during second call process, company will ask 1 rupee for each share, right? So this process you need to remember. First, what happens? Public or general public will pay certain amount, application amount, directly into company's bank account. Okay, this is application process. And after company receives application, company will accept certain applications, or maybe full applications, all applications. Then company will do the allotment of shares to public. Now public becomes shareholder. So allotment is the second process. Okay, then after that, once general public becomes shareholder, after certain time, okay, after a time gap, company, if it requires amount, then company will make the first call. Okay, so company will ask to pay the amount, right? So 3 rupees are remaining. It's not necessary that the company should ask only 2 rupees. Okay, it can ask full 3 rupees during first call itself. Okay, it can tell that the first during first call itself you pay the remaining amount, it is 3 rupees. So if company asks 3 rupees during first call, the first call will itself be final call. First call will itself be the final call. Okay, so third step is first call. Okay, then again if balance is remaining out of 10 rupees, right, then what happens? Company will again, after 2 to 3 months, company will again call the public, I mean it will ask the shareholders to pay the remaining amount, which is 1 rupees. Okay, so now no balance is remaining. Company has collected all 10 rupees during different stages or process. So this second call will be final call. Okay, assume so the share price was 12 rupees for each share. Okay, in this case, still 2 rupees are remaining. Okay, so this 2 rupees company can again after 2 to 3 months ask or call the shareholders, which will be called as third call. Okay, so now then second call will not be final, so third call will be final call. Third and final call. Now company will say, so you can pay us the remaining 2 rupees. So this process is very important. Okay, you have to understand this process, and remember, for each and every process we need to do 2 entries. We have to do 2 entries. Okay, so I will teach you all the accounting process in the upcoming session. For today, it was just about the concept and process. Okay, so if I have to say summary about today's video, so basically when any company requires certain amount, or it requires certain additional capital for its business, then company can issue the shares if it is successful in its IPO, initial public offering. Okay, if it is successful in its IPO, company can issue shares to general public. Okay, so for that, what company has to do? Company has to make an advertisement to the general public. Okay, or give notice to general public that this company is going to issue the shares. If people are interested in purchasing the shares of that particular company, so company will subscribe to it. Okay, company will subscribe to that particular no, general public will subscribe to that particular company. Clear? So first of all, they will pay the application fee. Okay, whatever application fees will be there, right? So share price, per share price will already be decided by the company. In that, application fees will directly be paid by the general public to company's bank account. That will be first process, application. Then out of all applications received, company can select certain applications or it can select all applications. Okay, then they can uh, allot the shares to the general public. Okay, allotment of shares on their own name will be the second process. So during allotment process, general public become shareholders of the company, whoever has subscribed to the a company. Clear? They will become shareholders. Allotment will be second process. Okay, then after, suppose, now assume during allotment itself company received full amount, like 10 rupees was the share value, 7 rupees were remaining. So during allotment itself company asked to pay full 7 rupees. Okay, in that case company will not do any calls. Company will not do any calls. No first call, no second call, no third call. Okay, if balance is remaining, then after certain time period company can do first call, which is nothing but company is asking to pay them remaining amount. How many calls company wants to do, it totally depends upon the company. Okay, it totally depends upon the company. So application and allotment will be compulsory. Okay, these two processes are compulsory. Remaining depends upon company, how they want to collect the balance for each share, right? They want to collect it in 3 calls, in 2 calls, in 1 call, maybe in 4, maybe in 5. It totally depends. Okay, all this information will be given to you in the question. You just have to remember that for each and every process we are going to do 2 entries. We will be doing 2 entries in each and every process. Okay, understanding this process is very important. Okay, so what will be the journal entries, that I will discuss you in the next class. Okay, so if you liked this particular session, then please hit the like button. Also subscribe to the channel. I hope to see you all in my upcoming videos. We will be covering full of this chapter. Okay, and we'll be solving questions on each and every topic from this chapter. Like we have oversubscription of shares, we'll do 1 or 2 problems on that particular topic. We have issue of shares at premium, at discount. Okay, we'll be doing separate questions on each of those topics. So we'll go topic wise. Then at last, we'll do combined problem. Okay, we'll do problems on all the topics from this chapter. Okay, but still this is the first video. Understanding concept was very important. So if you have doubts regarding this concept, you can ask me in the comment section below. And if you liked this particular video, then please hit the like button. Also subscribe to the channel. I will see you all in my upcoming session. Till that, happy learning.